Right now, a handful of penny stocks are quietly making moves that could turn small investments into massive gains, but here's the part no one is talking about. Most of these companies are flying completely under the radar, while early investors are already positioning themselves. In fact, one of the stocks we're about to cover has already shown explosive momentum in a very short time. And another is sitting at a level where even a small surge in volume could trigger a huge breakout. But before you get too excited, you need to understand this. Penny stocks are a completely different game. They can skyrocket 100% in days, but they can also crash just as fast, wiping out unprepared investors. That's why in today's video, we're not just looking at hype, we're breaking down what these companies actually do, why they're trending right now, and most importantly, whether they have real potential or if they're just another short-lived pump. I've carefully selected 5 penny stocks that are getting attention based on unusual volume, recent price action, and growing interest among traders, including AIEV, Purple Innovation, Aeries Technology, and GCL Global. Some of these have strong narratives behind them, like electric vehicles and clean energy, while others are more of a turnaround or hidden growth story that the market hasn't fully priced in yet. And here's the key: if you stay till the end, I'm going to show you which one of these has the highest risk-reward set up right now, and why it could be the most explosive opportunity on this list. Just keep in mind, this is not financial advice. This is purely for research and educational purposes, to help you spot potential opportunities early. So, if you're serious about finding the next big move before the crowd jumps in, make sure you watch this video carefully, because timing in penny stocks isn't just important, it's everything. Starting with AIEV, also known as Thunder Power. This is one of those classic high-risk, high-reward penny stocks that has recently caught traders' attention due to its explosive price action and sudden spike in volume. If you look at the chart, you'll notice sharp upward movements followed by pullbacks, which is a clear sign of momentum-driven trading rather than long-term institutional accumulation. The company itself is tied to the electric vehicle space, which is already one of the hottest sectors in the market, especially when hype cycles return. That alone creates a strong narrative, because retail investors love EV-related stocks, particularly those trading under $1, where even small moves can translate into massive percentage gains. The bullish case here is simple: float, rising volume, and a trending sector. When these three align, penny stocks can move extremely fast, sometimes doubling within days. However, the downside risk is just as important. Stocks like AIEV often experience rapid spikes followed by equally sharp declines, making timing absolutely critical. This is not a buy and hold type of play, it's more of a momentum trade where entry and exit matter more than fundamentals. If volume continues to increase, this stock could see another breakout attempt, but if momentum fades, it could retrace quickly. So overall, AIEV is a pure momentum-driven opportunity that could deliver big gains, but only for those who understand the risks and act fast. Moving on to PRPL, or Purple Innovation. This stock stands out from typical penny stocks because it actually represents a real consumer brand with established products in the mattress and comfort industry. Unlike many low-priced stocks that rely purely on hype, PRPL has a recognizable name and existing revenue streams, which makes it a potential turnaround story rather than just a speculative play. Recently, the stock has been gaining attention as investors look for beaten-down companies that could recover over time. The bullish argument here revolves around brand strength and recovery potential. If the company manages to stabilize its financials and improve profitability, even a small improvement in sentiment could push the stock significantly higher from these levels. Additionally, consumer brands tend to attract institutional interest once they show signs of recovery, which could further support upward momentum. However, there are still risks to consider. The company has faced challenges including competition, cost pressures, and debt concerns, which have weighed on its stock price. That means this is not a guaranteed recovery, it's a calculated bet on a turnaround. Compared to other penny stocks, PRPL may offer slightly more stability, but it also might not move as explosively as ultra-low float stocks. So this is more of a balanced play, less hype-driven, more fundamentals-based, but still with enough upside to attract investors looking for undervalued opportunities. Next is AERT, or Aeries Technology, which is one of the more under-the-radar names on this list, but potentially one of the most interesting from a growth perspective. This company operates in the technology and consulting space, providing services that are increasingly in demand as businesses continue to outsource operations and adopt digital transformation strategies. What makes AERT particularly compelling is that it combines a strong sector technology with a relatively low valuation, which is exactly the kind of setup many investors look for in early-stage opportunities. The recent attention around this stock appears to be driven by growing awareness and increasing trading activity, which often happens before a larger move. The bullish case here is based on long-term demand for tech services, especially in areas like AI data and outsourcing. If the company continues to grow its client base and revenue, it could gradually attract more investor interest, leading to a sustained upward trend rather than just a short-term spike. However, the risks are also clear. This is still a low-volume stock compared to major tech companies, which means liquidity can be an issue. Low liquidity often leads to higher volatility, where even small trades can move the price significantly. Additionally, because it's not widely followed, news and updates can have an outsized impact on price movements. So AERT sits in that middle ground. It has real business potential, but still carries the volatility typical of penny stocks. Now let's talk about GCL Global, which brings a completely different angle to this list by focusing on the energy and infrastructure sector. Energy, particularly clean and renewable energy, has been one of the most talked about industries globally, driven by increasing demand and government support for sustainable solutions. This creates a powerful long-term narrative that can drive investor interest, even in smaller companies like GCL. Recently, the stock has started gaining traction, likely due to renewed attention on energy plays and the broader push toward renewables. The bullish case for GCL is tied to industry growth. As demand for energy continues to rise worldwide, companies involved in production, infrastructure, or technology solutions could benefit significantly. If GCL is able to position itself effectively within this space, it could see substantial growth over time. However, like many penny stocks, there are risks that cannot be ignored. Regulatory challenges, funding requirements, and potential dilution are all common issues in this sector, especially for smaller companies. Additionally, energy stocks can be highly sensitive to external factors like policy changes and market conditions. That means while the upside potential is strong, the path to growth may not be smooth. Overall, GCL represents a thematic play. If the energy sector continues to gain momentum, this stock could ride that wave, but investors need to be prepared for volatility along the way. Finally, we come back to Thunder Power as the number one high upside play on this list, not just because of what the company represents, but because of how the stock is behaving right now. When you look at the recent price action, one thing becomes very clear: this stock is being driven by momentum, speculation, and increasing trader attention. These are exactly the ingredients that often lead to explosive moves in the penny stock world. What makes this setup particularly interesting is the combination of a trending sector, electric vehicles, with a low-priced stock that has already shown it can move quickly. The bullish scenario here is straightforward. If momentum continues and more traders pile in, the stock could experience another rapid surge, potentially delivering outsized returns in a very short period. This is the kind of setup that attracts short-term traders looking for quick gains. However, this is also where the biggest risk lies. Momentum-driven stocks can reverse just as quickly as they rise, especially if volume drops or sentiment shifts. That's why this type of play requires strict risk management and a clear exit strategy. It's not about believing in the company long-term, it's about understanding the trade. So while Thunder Power may offer the highest upside potential on this list, it also carries the highest risk, making it suitable only for those who are comfortable with volatility and fast-moving market conditions. So at the end of the day, these are 5 penny stocks that are getting attention right now, but here's what really matters. It's not just about finding the right stock, it's about understanding the game you're playing. Penny stocks can move fast, they can create life-changing gains in a short time, but they can also take that opportunity away just as quickly if you're not careful. That's why smart investors don't chase hype, they watch volume. They study momentum, and most importantly, they manage risk. Out of all the stocks we covered today, some are driven by strong narratives like electric vehicles and clean energy, while others are more of a turnaround or hidden growth play, and each one comes with a completely different level of risk and reward. The key is knowing which type of trader you are. Are you looking for quick momentum trades, or are you trying to spot an early-stage opportunity before it becomes mainstream? Because that decision alone can completely change how you approach these stocks. Now, I want to hear from you. Out of these 5, Which stock are you watching the closest right now? Drop it in the comments below. And if you found this video valuable and want more updates on trending penny stocks before they explode, make sure you subscribe and turn on notifications, because I break these down regularly and help you stay ahead of the market. And remember, the biggest moves always happen when the majority is still unaware. So stay sharp, stay patient, and I'll see you in the next video.